don't want you guys to fall into the middle class trap, which is what I like to call it, where you're sort of encouraged to buy the biggest home you can afford. Don't do that. Please don't.
Yeah.
Right? Or, maybe your realtor is telling you like, and the whole system is sort of derived around buying as much. And I know homes can be a status symbol, so you want the nicest house on the block or the biggest house, but the stock market has appreciated more than a home has. Wealthies, welcome back. If you're new here, this is All the Wealth, Wealthmore's wealth building channel. I'm Mical Jeanlys-White, your host and CEO of Wealthmore. And today we have an exciting episode about home ownership. If you don't have one, how to get into one. If you have one, how to maximize your wealth. And with me today is none other than Cory, one of our Wealthmore Wealth advisors. So excited to have Cory here sharing all the things about wealth. Let's get at it. Cory, welcome.
Thank you. Thank you. Glad to be here.
Cory, so before we jump in, this is your first time on the podcast,
It
our
is.
accidental podcast. Why don't you introduce yourself, tell people why you became a wealth advisor, like just give people a little bit of who you are, where you're from, even where are you?
Yeah. So my name is Cory Falade. I'm born and raised in Dallas, Texas. I would say my financial planning journey really started with just kind of my own personal finances. Um, I was in I would say my late 20s, and I was looking at my 401k account, and I was like, am I doing the right things? I just had questions about it. And so, what I decided to do was just kind of get more involved in researching things about it. And then I realized there were some opportunities there that I should have, kind of taken on sooner. And so, as I began to do my own personal finances, I thought about how there's probably other people that were just like me, just kind of too busy with life and just kind of doing things that really needed some support in regards to kind of what they can do with retirement. And so from there, I began to do research on financial planning, how to kind of provide it for others. So I went to school at SMU where I did the CFP education requirements and took the CFP exam just so I can get licensed as well as get a better understanding of financial planning so I'll be able to serve other people. And so from there, that's what really started it all. And just kind of being able to see people like help people with their finances, kind of help them like see things that they didn't see before, make adjustments and improvements and help them achieve their goals is what really led to me pursuing this career.
I love it, Cory, because I think most people in America are first generation wealth builders. And even if you're not, financial literacy is not taught in most schools here. Most of us sort of get a job and we're sort of winging it, not quite knowing what to do, and then sort of like stumbling and trying to figure out like where do I go to get help? Who can I go to? And I just love to tell people you really want to talk to certified professionals who have put the hard work in to learn about financial planning. I know some of you guys are listening to like TikTok influencers
Mhm.
and people on Discord. Honestly, guys, like, please talk to the pros.
Yeah, and
There's
it's
a reason. Yeah.
I was gonna say there's so many you know there's so many people out there that's trying to provide financial advice. It's really important to kind of see who has licenses or what licenses, and then even like understanding like some of these companies that are out there are meant to kind of sell you insurance, right? And not necessarily do financial planning. So you kind of have to, you know, do some research in regards to kind of what you're looking for to serve you.
Yeah. And I always like to tell people that, when I got a financial advisor, it felt like being upgraded from coach to first class. And sadly, because 70% of Americans don't have a financial advisor, most people don't even know what that upgrade is going to look like. And it's really someone helping you with your investing strategy, your long-term wealth planning, tax optimization, home ownership, how to do it the right way. And so with that, I want to jump into this home ownership because I tell you, things like getting a mortgage And points, like nothing gives me a bigger headache than trying to figure out the points. So, Cory, tell us, why does it matter for people to be homeowners and how can they build wealth through home ownership?
So with home ownership, I think one of the key things here is that homes appreciate, right? And so, there's many things that we can buy that doesn't appreciate. And basically, what I mean by that is when you buy it today, generally speaking, um, years from now, that asset is going to be at a higher value, right? You'll be able to sell it for a higher price than what you bought it for. In addition, you kind of have somewhat control in regards to how much you pay in principal and interest. And so, and I know we're going to talk about a little bit about rent later, but with rent, you don't really have control over how much it's going to increase necessarily, right? And so, with home ownership, you also get the side of appreciating asset, but also somewhat of a control in, how much you have to pay from month to month, or have an expectation of how much you have to pay from month to month. So. It's definitely a wealth building tool. I will say that, the average homeowner has about, 40 times more net worth, than the average renter, just because you're building that wealth within that home.
Yeah. I want to double click on the 40x, right? Because I feel like for the last 10 or plus years, there has been this debate about whether or not young Americans should become homeowners or rent. And frankly, I feel like you guys were sold a bad bill of goods because rates were incredibly low. And I saw a lot of influencers and talking heads convince young people that they should not buy homes or they should wait or owning a home is too much of a headache. But you need to have a roof over your head. You need to
Yeah.
have somewhere to live. And sadly, a lot of people fell for that bad advice or advice that wasn't really personalized to their situation. And now we have folks who are feeling like I may never be a homeowner. And when you hear that it's 40x, that's the real data, not this notion of, I'm going to couch surf, not own a home, or it's too overwhelming. Like, if you feel like owning a home is too overwhelming, buy an apartment, buy a condo. It doesn't have to be like the full on, four bedroom, two and a half
Yeah.
home. I grew up in New York. We lived in apartments for most of my, growing up years. When we became homeowners in the suburbs, I definitely missed having a super. I was like, oh, we're responsible for snow removal and blowing the
Mhm.
leaves. Like,
Yeah.
it is a lot of work. And certainly, if we had lived in a condo and apartment, it would have been more manageable out the gates. But it's not a reason not to truly explore home ownership, right?
Right. And, I would say just even over the past 10 years, like home values have increased by so much, right? And so, by not, let's say, for example, for me, I'll use myself as an example. Thankfully, I was able to get my home late 2020, so right before the big surge in interest cost and home values. But, um, you know, if I would have purchased this home, I would say probably 3 years before then, I would say probably $50,000, in purchasing the home. You have to realize that if you were to just kind of just take advantage of the opportunity, or realize that the net gain from, owning a home sooner, that, you'll be able to see the appreciation in the end.
Yeah, yeah. And we looked at these numbers a few episodes ago when Tanya and I were sort of giving people a bit of the data on like stock market appreciation versus home ownership. And I can drop the link in this episode, but guys, like we have seen consistently in the US that over time homes were going up by 3 to 4% annually. So not like a car that's a depreciating asset or, whatever other random thing that people might sometimes believe is an asset. Homes historically have appreciated in value. But I want to put a bit of like a pin on this because I also want to make sure as you guys are thinking about home ownership as a wealth creator, I don't want you guys to fall into the middle class trap, which is what I like to call it, where you're sort of encouraged to buy the biggest home you can afford. Don't do that. Please don't.
Yeah.
Right? Or, maybe your realtor is telling you like and the whole system is sort of derived around buying as much. And I know homes can be a status symbol, so you want the nicest house on the block or the biggest house, but the stock market has appreciated more than a home has. And so you want to balance the two as part of your wealth building strategy. You don't want to necessarily over invest in a home because that means you have less liquidity, less like disposable income to invest in the stock market, which historically has outperformed the appreciation you would see in a home.
Yeah. And also, banks are willing to give you more money to buy a bigger home than what you can really afford, right? And so you just have to be cognizant of finding that balance as you were speaking of, to make sure that you're not, overspending. Because, like, the mortgage is going to be one thing, but then you have to consider taxes, you have to consider maintenance of that home, also additional bills that you make, lawn care and just various things that may come up with home ownership. So, just kind of be cognizant of the affordability piece as well as just kind of pacing yourself, I guess, in a sense.
Yeah, no, it makes total sense. So for those who are on the home buying journey, haven't purchased a home yet, you know, I personally can think back to it. It felt overwhelming. Like it definitely felt like adulting on steroids. Like, well, you're an adult now. You're trying to buy a piece of real estate and have a title and a loan and, a mortgage. So, Cory, tell people a little about what's the best way to approach the whole process of like, I want to become a homeowner? And even like, how early should people start?
Yeah. Um, so I would really start with just kind of identifying, what is affordability to you, right? Kind of understanding just now, kind of what your budget is in a sense of kind of how much can you spend on housing, okay? And then from there, from there, you want to kind of take a look at your credit score to kind of see if your credit is in the, I would say in the at least in the upper 600s, 700s, preferably 800s, because the better the credit score, the lower the interest rate. And so you want to definitely take a look at your credit score. Also, you want to begin saving for the down payment. You want to try to get to that at least that 20% if you can. And then also even kind of looking at resources that may help you with the down payment as well. In
Cory, I want
addition,
to
go ahead.
double click on the credit score, right?
Okay.
Because that's a big one, right? Like, and sometimes people might say, oh, my credit score is good. Well, when you're going into a home buying situation, you want to have the best credit score you can because that is going to dramatically impact whether or not in today's market you're getting a loan at 6.5% versus 8%.
Mhm.
And that's going to dramatically impact that monthly payment. So, guys, you really want to be looking at that score, planning for it. If you have things on that credit report, if you're not making on time payments, now's the time to be making on time payments. If you have like too much credit card debt, now's the time to like reduce that because that's going to go into the formula. So it really does matter when you're trying to get a loan for 15 years, 30 years. You want that to be the lowest APR rate that you can get on that loan because while you can refinance down the line, it costs money to refinance. So you want to get it right the first time around.
Yeah, for sure.
Yeah, the down payment impacts it, right?
Yeah, so the down payment is definitely important. Like I said, you want to make sure you get that 20%. And the reason for that is because if you don't hit the 20%, typically banks will tag on like a insurance, like a mortgage insurance. And that's kind of to say that, oh, well, to kind of help the bank feel safer that, oh, you're going to pay this back. Instead of re adding that additional cost, you want to try to make sure you get to the 20% down payment so you don't have that additional mortgage interest expense as well.
Yeah, because the approval is a combination of the two, right? Like how
Yeah.
much of a down payment and how much, what your credit score is. So you want to put your best foot forward on both of those,
Hmm.
credit score and that down payment.
Yeah.
Yeah.
Another item would be just kind of getting. getting the pre-approvals, I did receive a question about, how do I should I shop for, approvals, or how did that work? And so, um, when it comes to finding the right mortgage, or I would say the rate, it's important to do some shopping. Check out a couple of lenders that can kind of assist you with, well, can kind of give you a pre-approval. And when you do that, you want to kind of do that within a closed, I would say, 2-week window. You don't want to like shop, this month, and then, look around at another mortgage company next month, and then a month after that, just because it can impact your credit score and the inquiries that hit your credit. And so, definitely consider the 2-week window, when you're deciding to do your shopping for the right mortgage. Another option that you can consider is even using like a mortgage broker. Now, granted, a mortgage broker is a little bit different from, I would say, a mortgage lender. In the sense that a mortgage broker is going to be working with multiple banks or multiple lenders, that can kind of find the best interest rate for you, or the terms for your needs. And so, you can definitely consider a mortgage broker. Just know that there will be maybe a 1 to 2% cost for the mortgage broker, right? And typically that can be tagged on into, whether it's the loan itself, or they may assess it to the borrower directly. So you just want to kind of consider those things when you're considering.
See, that's new to me. Like I told you, home buying still makes
Yeah.
my head hurt. That's important to know that you're spending or you could be paying more in order to have a mortgage broker. And I think a lot of people, when they go into a realtor's office, that realtor is working with some sort of a mortgage broker,
Mhm.
right? So, guys, it's super important to like shop on your own as well and try to get the best rate that you can and not just sort of blindly assume that all of, the moving parts are necessarily in your favor.
Yeah, for sure.
Yeah. Yeah.
I would say, okay, so step four, just kind of the considerations when it comes to home ownership, is just kind of to factor in all the cost of, going through the home buying process. So you're going to have your closing costs, as well as, your property taxes, and just kind of maintenance costs, right? And so when you create this budget, it's important to consider all those factors into when you're getting ready to make this payment. Also, there may be like some additional expenses that may come up during the home buying process, such as inspections, things like that. There may be some earnest money that's involved, where they're like, oh, we need X amount of dollars, by this date to hold, during this inspection process. So, those are just some additional factors to consider when you're going through the home buying process.
Yeah. It's a great point because you guys will find yourself in a pinch if you just say, oh, I spend $1,500 a month on rent. So I'm comfortable taking on a mortgage that's 1,500. We don't recommend you do that. There are additional costs of home ownership beyond it's not a equal transfer. Yeah, I think some folks would say the rule of thumbs is what, 20 or 25% more you should sort of factor in.
Yeah.
Yeah, yeah, because those costs, there are a lot of things your landlord covers that you're not necessarily privy to that's sort of factored into your rent. And now that you are the landlord or the homeowner, you need to do the same.
Right, exactly. And that goes back to just not, just because the lender will give you $500,000 to purchase a home doesn't mean you have to use all the $500,000, right? So you want to make sure you have room to, be able to afford the home that you're wanting to purchase, as well as live life, right? Because you still want to have happiness. You don't want to be, you know, s- uh, in feel indebted to the house and feel like it's more of a burden than an enjoyment. So
Yeah, you don't want to feel like we have a house, but we can't go out to eat anymore. We have
yeah,
a house, but we can't go on vacation anymore. Because now you're gonna like maybe resent and hate the house. Like we don't want you guys doing that. We
yeah,
really
exactly.
want you guys, and this is where sitting down with a financial planner would be helpful so that you can sort of map out the cost and really like think about what fits into your lifestyle and how you want the home to sort of fit into your lifestyle versus take over your lifestyle.
Exactly.
Yeah. So, Cory, I definitely want to go maybe shift a little for folks who are already homeowners, who might be looking at different ways once you become a homeowner there are things where people may look at that investment. One, let's talk about how it is sort of an investment, but how people may also at times look to pull equity to do other things from that asset and sort of, what are the do's and don'ts, if you will.
Yeah. So when it comes to, let's say pulling equity out of the home, right? You have the option to do some refinancing, where it's basically, you want to take the equity out, so you're going to refinance the loan that you have. And, depending on when you purchase the home, the interest rate that you had in the beginning may not be the interest rate that they're offering you, right? And so when you purchase let's say, or when you decide to go into getting a home loan or refinancing a loan, you have to be cognizant that, you may have this bigger loan amount, and then you also may have a higher interest rate, which is going to increase the total cost of,
Yeah,
your monthly payments from month to month. So you want to definitely consider that.
yeah. And I do want to, for those who may not know what equity in your home is, we should maybe clarify what that is as well. So
Yeah.
let's say, well, I'll let you do the explaining.
Oh, yeah. So equity in a home is basically, let's say, for example, you purchase a home for $200,000, right? And then over time, I would say, I don't know, 2, 3, 4 years, now the home value is at 210 or 215. Okay. So that $15,000 difference between the 200,000 when you first purchased it, and then the 250, the 15,000 that it increased over time, is going to be the equity, right? And then also you have another piece of equity that builds up from you making principal payments, right? And that's paying off some of the loan over time over those few years, right? And so you may have an additional, I would say, I don't know, $4,000 or what have you, right? And so now you have $19,000 in equity, which is basically, you know, I wouldn't say money in your pocket, but it's extra value that you have in your home that's not included in the loan.
Yeah. And so people might look at that and say, I want to do a refinance because they want to take that value out to do maybe, I don't know, people
Yeah.
refi
Home,
for different reasons. But we want you to be intentional about why you're doing it.
Exactly. And I know some people take it out for make improvements to their home, and then also maybe even to consolidate debt or things like that. So you want to, definitely consider what the difference is as far as interest goes, and then also kind of how it impacts your taxes. I know we haven't talked about that yet, but how you use that money can impact how you're going to be taxed, right? And so. For example, if you decide to use, the money that you take out with equity and apply it to some home improvements, right? The interest that you pay on that additional equity, if it's for home improvements, could be deductible, right? So you want to consider that, as you're taking it out and how you decide to use the money from the home equity.
Yeah. Yeah. I want to definitely focus on folks who maybe have a loan on their home at a very low APR. So at the height of when rates were really good, some folks took advantage of it and they were getting 30-year mortgages for 1.75. I saw people getting jumbo loans, which are loans of over $1 million at 2.25 or 2.5%. Those are really, really good rates that you cannot find in the market today. So if you are thinking of refinancing, you need to be cognizant that you would be essentially repricing that entire loan. So the example that Cory gave, where you're looking to get 15 or $19,000 out to finance a new project, let's say you go that route, please understand that you are now moving the entire remaining balance of your loan to, let's say, one less than 2% to potentially 6, 7%. So that payment's going to go up even if you're extending that duration. So I want you guys to be very aware of the rates that you have versus the rate you might be moving to, because the new rate that you move to doesn't apply just to the 15 or the 19,000. it applies to whatever the remaining balance is on that mortgage. Is that hopefully you guys are tuning in, writing this down so that you're not shocked and like, oh, that's not what I intended to do. And with that, I want to talk about a HELOC, which doesn't do that.
Right, exactly. So a HELOC will be a little bit different. So the home loan you're gonna have like you're typically gonna have a fixed interest rate, right? And so they're gonna lock you in at right now, I think rates are probably averaging around 7 to 8%. But with a HELOC, it's gonna have a variable rate. Okay. And a variable rate is basically saying that, okay, this loan or if this line of credit, as you take it out, the interest rate on it can fluctuate. Okay. So right now, I think the interest rates are probably around 7 to 8%, as I said. But we don't know what's going to happen over the next 5, 10 years, right? And so just like, well, God forbid there's a pandemic where the interest rates fluctuate a lot, but interest rate can increase. I would say over the pandemic, the interest rates increased by 4 or 5%, right? So all of a sudden, something that you thought you could afford has the interest rate, kind of added 25% to it, in payments. So you want to be kind of careful with that as you consider it. But additional information on a HELOC. So a HELOC is basically a line of credit that you get for the equity you have in your home. Okay. So in theory, it's similar to think about how you have a credit card. You may have a credit card that has, I don't know, $5,000 available on it, right? It's available to you. You're not going to be charged interest, right? Until you take some money out or use it to pay for something. Okay. And so when it comes to a HELOC, you're going to have this line of credit available to you based on the equity of your home. I think they may give you up to 85% or so. And so, once you take money out of it, at that point, you're going to be charged at the variable rate that I just kind of talked about. And so as you pay it back, it will kind of similar to a credit card, you'll start having, you'll be able to have an additional credit available to you at that point, right? But if you don't pay it off, let's say the principal and interest, then you're going to have this additional balance in addition to your mortgage, right? So you're going to have a mortgage, but then now you're going to have a HELOC that is going to be due, and they're going to be well likely at two different rates depending on the time. So you may have a HELOC that's charging you 8% while your mortgage is charging you 4%. So we want to be mindful of that.
Yeah, yeah. And this is where, guys, we highly recommend you get the benefit of advice. Investors who have the benefit of advice generally grow 2 to 3 times more wealth. That advice comes from exactly what Cory and I are doing here, scenarios, right? Like, does it make sense to refi versus does it make sense to look at a HELOC? How much home should I buy so that I have or the home fits into my lifestyle and I still have cash flow, I still have disposable income to invest and do other things, right? Like
Yeah.
this is not the easiest stuff, but those sort of taking the time, meeting with the wealth advisor to go through the scenarios makes a huge difference. And that's why it is just so important to consider, meeting with a professional, not just listening to whomever on TikTok or Discord who's like, oh, just go do this. It's
Mhm.
never just go do this.
Right. And then if you're working with I would say if you're working with a good planner, they should be able to kind of provide you, I would say, at least a spreadsheet of some sort to kind of see, what the output or what the cost or cash flow is going to be if you decide to go this route versus if you were to maintain it this way. So, for example, let's say, for example, if you decide to use the equity in your home to pay off, I don't know, credit cards, right? Or, to consolidate debt, we should be able to, well, a financial advisor will be able to kind of calculate to let you know, okay, this is what the impact would be on your cash flow or how much you're going to use or spend over time, and to kind of help you figure out if it's beneficial or not. Ultimately, it's up to you. As a financial advisor, I always tell my clients, we want to collaborate with you to kind of help you make the best decision. It's ultimately up to you on what route you decide to take. So,
Yeah.
yeah.
And you're right, because we also see people take out home equity or refinance to take equity out of their homes to help pay for their kids' schooling, college education. That's a whole nother topic, which we as wealth people have thoughts on because, your children can borrow for their education. You can't borrow for your retirement. So again, you want to think about those scenarios and people also looking at homeownership or real estate as a way to build wealth. And we can do a whole different segment on that. But this is again where you want to sit with the planner and look at the scenarios and look at, hey, what does the return on a rental property look like versus investing in the stock market? And also to that point of fitting your lifestyle, like, if I buy equities, I don't have to worry about the roof or the hurricane or the snow removal. So
Mhm.
again, sort of thinking through like what are the best wealth strategies that fit my lifestyle and how I want to live versus, hey, this other person is doing it, I should do it too. Or this influencer said that's a great idea, but maybe not a great idea for me.
Yeah, for sure.
So Cory, as we sort of like wrap up here, what do you want to leave folks with as like the do's and the don'ts and sort of how to think about this market?
Yeah. So first and foremost, I do want you to be able to come in with a plan, all right, in regards to how you want to tackle it. So whether if you're in the process of buying a home, you want to kind of already have a sense of what your current budget is, right? You don't want to be kind of in a frazzled state already, like, oh, rent is too high already. I need to buy a home, and then just up and buy a home, right? You want to kind of have a plan and strategy of how much is affordable, what is it going to cost to live in a certain area? Where do I want to live and things like that. Okay. In addition to that, if you're in the place of where you already have a home, you want to kind of be mindful of, are you including it as an itemized deduction, the mortgage interest on it? Are you including it as an itemized deduction? If you're deciding to do some improvements to your home, kind of understanding how that's going to impact your taxes. So you want to get with a financial advisor or a tax professional to kind of help you figure that out, right? Or what the game plan should be in that regard. Another item of this is just kind of like understanding kind of what strategy you want to have in home ownership, whether it's going to be more of an investment property versus kind of your residential. For example, there's some capital gains that you can get with home ownership, right? Or if you decide to sell it, so to speak, right? So, if you decide to sell your home, you can get up to, and this is just based on current tax law, right? It may change over the next, 6 to 12 months, but currently you can get 250,000 or up to a $250,000 tax exclusion in regards to the gain that you make from it. So, you definitely want to get with a tax professional if you're kind of looking at making some changes in regards to your home. And then you also want to get with a financial professional that can kind of help you measure out um, what the impact will be in regards to, making, different choices when it comes to your home, and then also kind of helping you prioritize some of those goals, whether it's debt consolidation or how to pay off debt better, and things like that.
Yeah. No, great point, Cory. Desiree and I talked about this a little in one of our previous episodes for homeowners. Like, if you're making big investments, capital improvements to your home, you want to keep track of all those receipts. Those have positive tax implications for you when you resell in terms of how much that capital gains tax might be. So again, just these little tips that talking to a wealth advisor will help you guys with. So
Mm.
guys, as we wrap up, I just want to encourage you guys, if you're thinking about home ownership, if you currently have a home, join the Wealthmore home ownership community. You can schedule one-on-one with Cory for more advice, but investors with wealth advisors do better, 2x better. That advice really matters. You can download the app, Wealthmore. Community is free. Join the community, get the insights and tips to help you do better. And of course, subscribe, tune in. Until next time, wealthies, all the wealth. Thank you.